Volatility is absolutely a natural part of investing. The markets are going to go up and down, the economy shifts, times are changing all the time, politics affects things, there's all kinds of stuff that happens, and if you go into things thinking it's always going to be good times, you're going to be sorely mistaken. So typically when the market is going down, investors tend to feel very nervous. They don't know whether it's going to be down for a couple of days or a couple of weeks or a couple of years. And so panic can start to set in, and sometimes we don't make the most informed choices when we're feeling under emotional stress like that. And so that's something that's really important to manage, is those emotions, because they lead to the decisions that we make when we're investing. As an investor, when the markets are volatile, the most important thing is to take a look at your financial plan. What are we investing for? When are you intending to use that money? If you're intending to use that money not for a very long time, then what you need to do is not panic and have faith in the plan that the market will go up and down and that that's okay. If your timeline is very short, say you're about to retire, that is when you need to take some action and address whether you need to make changes to your portfolio. When the market starts to get volatile, a lot of people think, I'm going to get out now and I'll get back in later. And the problem with that is nobody can really time the market. And so you don't have a crystal ball, neither does anyone else. And there's lots of problems that can come with that. One, you might get back in way too late. You might miss out on growth that could have been happening in the meantime. It's way better to stay the course with your long-term plan. It's one thing to say don't panic when the market takes a downturn. It's another thing to actually not panic when the market takes a downturn. So how do we actually do this as investors? The first thing is to try and make a plan in advance that takes into account the fact that the market is going to fluctuate. Markets are volatile, they will go up, they will go down. Another thing that you can do to keep the emotions in check during bad times of the market is to not look at it so much. You know, modern technology makes every little bit of information at our fingertips. Log out of your account, set it aside, don't look at it every day, because that's how you're going to drive yourself nuts over time, seeing the fluctuating value.